Welcome, everyone. Welcome. Once again, my name is Alex. I am here with the Figure team. We have an exciting one for you today. Just some quick housekeeping items. This, first and foremost, is being recorded. We are also live on LinkedIn. Hello, everyone on LinkedIn. So if you have any questions, as we always do Q&A, you will see a Q&A section. And of course, as always, we have Tim Rowan and Reef Wosen. Tim being promoted to Senior Director, which I'm very excited about. And we have our special guest, Linda Kennedy. Tim, why don't you go ahead and kick us off?
Well, I love it because here we are again. It's Webinar Wednesday, and I got to tell you, it seems like these things have picked up pace. It seems like every day it's Webinar Wednesday. I know it's not that, but we do have, and actually, I'm really pleased to introduce Linda Kennedy with CrossCountry Mortgage, one of our larger retail partners. So, Linda, thank you for jumping on the call with us today.
Thanks for having me. I'm excited.
Yeah, well, and actually, I should give, I suppose, a little bit of backstory to that in the sense that you had made some outreach regarding a couple different files. We're tracking down some different things, full transparencies. It was a topic on some notaries, which we're working through. And Linda says to the team, she's like, "Hey, I would love to be on one of your webinars someday." And we're like, "Well, let's make that happen then." So, Linda, thank you again for that. And I just want to set the stage here a little bit. Because, well, first, let me ask you, Linda, how long have you been at CrossCountry?
We were acquired by CrossCountry in March of 2022, but our group has been together as a whole since 2013.
Wow, that's awesome.
Yes. Mm-hmm.
Yeah, and pretty much all the same folks and everything?
Pretty much all the same people, yes. We
Yeah,
all came to CrossCountry and absolutely love it here.
That's
Great.
impressive. And you're a regional leader, correct?
I'm the regional president for Georgia, yes.
Fantastic. Well, interestingly enough, when Linda and I were talking the other day, it occurred to me that not long after, actually, it would seem that you joined CrossCountry. CrossCountry was one of the very first partners of Figure in the retail model. And so you have, I want to say you all onboarded in 2023. I think that's what we discovered. And so,
2023.
yeah. And so, Linda, you've seen some changes take place over time with our platform, right? Not only just obviously the market conditions and that type of thing, but when you all first onboarded, there was no such thing even as an inquiry tool. So now, of course, you, for quite some time, you've had the inquiry tool. You also have the direct link. What is your preference? Where do you see your sales team or your region engaging the most on that topic?
What we like to do is send out that direct link to the application. And we also, I guess it just depends on our customer. And some of the customers, we just go into our pipeline and complete the application ourselves. So I think it's just customer specific on which way we do. But I try to send my link out to everybody first.
Yeah, and you made an interesting comment to me the other day. You said I don't know if this was you personally or if it's your sales team, but you said like you have 3 of these a day coming across your desk. Is that?
At least, yes, at least 3 a day.
Very nice.
Yeah, that is
Yes.
incredible. By the way, the reason I think that's so powerful is because the point I want to drive home to everybody that may be attending the webinar here is make no mistake about it. The need and opportunity is real. You know, it's interesting, Linda. We were actually speaking to a loan originator recently. Actually, Reef was, and the loan originator made this comment to Reef. He said, "Man, I just don't do HELOCs. I just refer them out. I send them to their bank because they have them at less cost or whatever the case might be." Well, one, how do you feel about that? Like,
I think that is an absolute missed opportunity. I have never seen such an easy platform as what we have here through the Equity Express program. And you really don't do anything except sell the product up front and then have the trust in you guys to get it done. So they are missing out on a huge opportunity on referring their customers one to someone else, but also missing that income and compensation on keeping those in house. We had our monthly meetup this morning with Ron and the owner, the owner of CrossCountry Mortgage, and he said there is more equity in properties than there has ever been. So
over
people,
30 trillion currently
yes,
in the US, over 30 trillion in equity.
Yes. So if you're a loan officer in this industry and you're not able to do equity lines or home equity lines, you are really going to be missing out over the next 24 months, especially. I feel like I don't know what I would be doing right now if we weren't able to sell home equity lines of credit. So it's a definite missed opportunity for any loan officer out there. I don't think anybody that's not doing them, they're not trained on them and they don't know how streamlined and how easy that you guys have made it for us.
Well, Linda, your point is such a good one. And so let's dive into that a little bit, and Alex and Reef chime in wherever you see fit. As an originator myself and in this industry for 25 years, I am guilty myself over the years, over my career, of yes, referring my client out, saying, you know what, check with your bank, check with your credit union. If you can't get it done, let me know and I'll dive in. And it's really important. I realized at some point, and then certainly coming to work here, I realized that that's actually what we've solved for. In other words, days of old, just a handful of years ago, in order to get a HELOC for somebody, it was like doing a full loan. It was a full package submission. It was appraisal, it was title, it was escrow, it was all the stuff all compiled. It was going to take 30, 45 days. There would be little, if any, compensation. The cost would be extremely high. And so sadly, I would just refer them off. I would just say, you know what? And then it occurs to me that what I was really doing is potentially sending that borrower of mine away forever.
Absolutely.
Because of the retention opportunity, right? And so now with the interest rate environment that we all know and love currently, this is actually the product that's filling the void. And the truth of the matter is, it's our process that's actually solved that pain that I just laid out. In other words, there isn't that full submission package and escrow and appraisals and all the stuff. We literally, to your point, Kimberly, you could send a link to your borrowers and your all's model, and they can go A to Z. You may not even realize what's going on until all of a sudden you see an email that says, hey, congratulations, you're loan funded, right? Then there's the inquiry tool aspect, which of course I will always lean on and be in favor of that. And we'll talk about that a little bit, but that's the process that we've solved for. So instead of it taking 30 days, it can literally take a handful of days, and a day in the life of a loan originator, it can take you, if you have the direct link ability, no time, or if you're using the inquiry tool, a whopping couple of minutes to find out what the offer would be. Does that all line up with your thought process as well, Linda?
It does, absolutely. And like you said, as a loan officer, I'm busy, doing purchases and catering to my realtors. So I don't want to be originating $40,000, $50,000 equity lines, but I don't want to lose those. So this gives us that opportunity to send that link and have it handled streamlined by you guys and still obtain the business. So it is an absolute no-brainer. And any new LO that doesn't have a lot of business, I sell this in my sales meeting monthly. Go out and start selling this Equity Express program. You literally can have 5 or 10 loans coming in daily that you don't even know about, because when you tell people about this program, your agents, your referral partners are going to start sending your link out to other people, which is what is happening to me now. I'll get an application and I don't even know who it is that's applied because somebody has just sent my link out to someone else. So it's not something that us as LOs have to be involved in every single day, getting these small loan amounts closed. So it's brilliant.
And yet the beauty of it is the path that you're on with your clients and whatever the case, using your direct link, it's all branded to you.
Absolutely.
You're still branding yourself as their loan originator and helping them out, which I think is, again, just an incredible retention opportunity, because maybe someday rates will come down, right? Again, at a point where you can then refinance them, right? But if you've sent that file off somewhere else, will we ever get that opportunity? That's always been my fear,
My fear as well. Yes.
If I send my client off somewhere, did I really just send them off forever?
Right. And
So
typically you do, once you give them that referral for a bank, then it becomes their referral. I like to consider myself the one-stop shop. And here at CrossCountry Mortgage, we are able to do every single program. So I want my borrowers to come to me for everything, whether it's a $7,000 Equity Express loan or, you know, a $70,000 home equity loan. I want them to think of me as the one-stop shop. And this helps us to do that.
it's a great point. And Kimberly, I actually, in fact, I haven't posted it yet, but I post videos on LinkedIn a couple times a week and just product enhancements, market opportunities, those types of messaging, right? And I haven't posted it yet, but I just recently did a video on this topic in regards to, isn't it interesting that some of our past clients don't perceive we can help them with HELOCs?
That's amazing.
This happened to me personally. I'm going to be completely transparent here. About 4 or 5 months ago, my brother-in-law called me and said, "Hey bro, are you home? Can we stop by? We want to talk to you." Him and his wife, we want to talk to you about some things. And they said, "Look, we're thinking about getting a line of credit." And they had gone online and tried something somewhere outside of our ecosystem. And they said, "What do you think about that?" And wasn't it interesting? Now I've done every loan for them ever. Any home they've ever purchased, any refi they've ever done, I've done them all for my brother-in-law. And yet they didn't perceive that I could help them with a HELOC.
Oh, wow.
And so shame on me, by the way, I'll take one for that. But it does interest me that when you look at the marketing, whether it's the TV ads, the social media ads, there's a real split. Everyone talks about HELOC, HELOC, HELOC versus refi. Don't do a refi, do a HELOC. And all the strategies are different. But I think what's happened from a marketing perspective is homeowners, I don't know that they perceive that their loan originator can actually be the one to help them with that.
Right. And the loan officers need to be heavily marketing this on all of their social media. I had 2 borrowers call me just this week who wanted to do bridge loans because we advertise a lot that we can do bridge loans. Neither of these borrowers met the qualifications for a bridge loan, so we turned them over to the Equity Express instead.
Sure.
So, you know, these people that are calling, listen to what they're needing and then maybe turn it over to the Equity Express. I challenged my loan officers in our last sales meeting to call on 3 stale listings. So find some listings in your area that have been sitting, call those listing agents and say, "Hey, if you could get your seller a quick Equity Express loan, even if the house is on the market to be sold, would this help them or thing so that they could sell the house faster or market it differently?" So that's another way for loan officers to be making cold calls to market this Equity Express program.
Okay, Linda, I just love everything you just said there. That is fantastic. Kudos to you. That is a get outside of the box and find ways to market and put yourself in front of more people to help. And I've said this for
Right.
years and years and years, that that's really what we're in the business of doing, is helping people. And if we can agree on that, then our biggest task is how do we find more people to help? And that is an incredible tip and trick right there, coming to you from Linda Kennedy, everybody. So
Well,
Linda,
thank
thank you
you.
for that. And
Yeah.
I want to expand on this a little bit. So, I don't know, I guess it was a month or so ago, Reef and I were invited out to a sales rally, but it was largely a realtor company sales rally that had their own small mortgage group with them. And I used to work very closely with this team. And so they asked me to come out and MC their sales rally event and also teach a class. And we were also in the vendor area. Well, to your point, Linda, it was, we taught a class to a room full of realtors, and there were a handful of loan officers in there. And the messaging was this. And so I want to encourage everybody to think of this also as a strategy. Get in front of your realtor referral partners, offer to help them navigate marketing this type of thing to their past clients. And here's why. Realtors don't realize it, but if someone they sold a home to somebody 4 years ago, there's a good chance those clients are in fact obtaining home equity lines of credit. Now, does the realtor per se benefit in that from a monetary perspective? Like, no, they're not the originators on them, right? However, the number 3 use case for us is in fact borrowers using their equity to help acquire additional property. And now you can have a conversation with your realtor referral partner that can then tie those together, like help that realtor referral partner navigate marketing this to their past database, having these conversations because they're all in love with their sub 3% mortgage rate from 4 years ago, right?
Mhm.
But do they need to rehab the property to maybe get it ready for sale? Do they need to pay off debt to better position themselves from a DTI perspective for their next purchase? Or are they looking for a vacation home or maybe an investment property? The
Mhm.
sky is the limit. And Linda, you knocked it out of the park because I never even thought about that from an existing listing perspective. That's got to be the lowest hanging fruit right there.
Yeah, and it gives you the opportunity to cold call a listing agent. Hey, I'm not calling to hit on you. I'm not calling to get your business. I'm calling to help you get this listing sold. So I'm calling to bring value to you to the table. So it helps to get your foot in the door on that call as well. Another thing is, how many times as loan officers do we get calls, hey, we want to do this fix and flip? Well, fix and flips are hard to do. And also, we know they're going to turn around and pay it off. So it makes it something we don't want to do as easily as we could do the Equity Express. If someone calls and says, I want to do a fix and flip, I said, let's look at the equity that you have in some of your investments, second homes, or your primary
Mhm.
residence, and let's get you some accessible cash quickly so you can write the check to buy the property, do your own repairs, not using someone else's draw period and their rules to do the fix and flip, and then there's no penalties. So let's utilize this money to do the fix and flips as well. So we're doing that with some of the realtors right now too.
Yeah,
Such a good
great.
use case.
Yeah, great opportunity. And I will tell you also, which it does become easier for you and your team, Kimberly, to do this with the direct link. Not all of our partners have that, by the way, just to make sure everyone's clear. Our wholesale partners, they have to use the inquiry tool. Our retail partners have both paths. And I've come to the conclusion that there's a line I draw in the sand, if you will, on this. I am a big fan of using that link, just like what you're doing, Kimberly, to attract brand new clients. These are people I may have never met or known before. If, however, I'm talking to a past client, someone I have a relationship with, I'm likely going to start with the inquiry tool just because it's going to take me 2 minutes and I'm going to drive what that's going to look and feel like for the borrower. Does that make sense?
Absolutely, yeah. And I think it's just knowing your clientele too, which
Sure.
one,
Mhm.
yeah, when you need to do it or when they need to do it.
Yeah, for sure. And to expand on that aspect beyond just realtor referral partners, we have a lot of loan originators that are also seeing success by meeting with folks like contractors, pool companies, solar companies, and they'll take that
Mhm.
direct link and embed it into a QR code on marketing material as an example. Now,
Yes.
you may not even know this homeowner, but you have a kitchen remodel outfit that's sitting in someone's at their dinner table, and they
Mhm.
can slide a document around and say, look, if you guys want another option for financing this $50,000 kitchen, just scan this code real quick. And then boom, they're in the system. And what's the beauty of that is even if for some reason they didn't qualify or didn't get offers, well, you, Linda, just acquired a new client. You now get to shift
Absolutely.
gears and come up with a new strategy,
Mhm.
Yes.
so I just love that. So I know we do have some questions and stuff coming up, but let's, what, if anything, Kim, and we can talk openly about this. I keep saying Kim, Linda, sorry.
It's okay.
Uh,
Call
I,
me whatever.
I'm the same way. I go from one meeting to the next and people call me all sorts of different things, probably rightfully so, by the way. But anyway, Linda, um, what would you say for you and or your sales team are the biggest adjustments you've had to make or hurdles you have to jump understanding or navigating the system?
I think initially was losing control. Our borrowers would put in the application and we could not see. We couldn't see the details of what was the reason for a denial or what was the steps that where was the borrower in the steps of the approval. So now with the lead portal and the pipeline view, we're able to go in and see that. But in the beginning, we were just kind of blind as far as, well, why did they get denied or what else is missing? So I think we've gotten past that hurdle.
It's such a great point, Linda, and you're right. That's actually relatively newer for us, where we have now, when you looking at the pipeline view, you can click on the box with the 3 dots, click on details, and that shows you all of the details of the transaction, at least up to date, right? And if there was a decline, it will give you the reason why for the decline, but you'll also see the credit score. You'll also see the AVM, again, giving you an opportunity to switch and come up with a different strategy for the borrower. This is really, really important to understand managing the pipeline, because even if you have brand new clients coming in that you may not have known, if you're not checking your pipeline every now and again, you won't know. And what I mean by that is, let's say a borrower goes in and uses your link, applies, and they didn't get any offers. Okay, maybe that's fine. However, when you look at the details, you might notice that the homeowner put in monthly income instead of annual. You might be able to ask the question, did you know you could use spousal income? And did you only put in yours? You know what I mean? Depending on the state, which most of them are community property homestead states. But it's little tips and tricks like that to understanding how to manage that pipeline. It can help a ton. So I love the fact that you've picked up on that, Linda,
Yes.
that you know.
One of the things we are running into is a lot of borrowers have business bank statements.
Yeah.
So we're not
Mhm.
sure how to navigate around that. Maybe you have some tips and tricks on that.
Well, I do in this, of course, and I can already know this to my core, that you're already very strong, and I'm sure your sales team is in this regard as well. But to me, this comes down to right at the beginning, as early as possible in the process, to ask the right questions of the homeowner. And of course, this is important no matter what loan product any of us are doing as originators, right? So if I'm talking to a homeowner and they tell me they're a wage earner, okay, great, meaning W-2'd on payroll, that type of thing. My follow-up question is, how do you receive your pay, and is it going into a personal bank account? That's key, because if it's going into a business bank account, well, the Plaid system, we don't have it set up to link to business bank accounts, but they're a wage earner, so maybe they use business bank accounts for something different. We will allow a borrower to upload pay stubs and award letters. So if it's a wage earner and I've asked that question and I know they don't have personal bank accounts, I'm now setting the expectation of the homeowner to say, listen, when you get to the income verification stage, just choose the path of uploading pay stubs. You see what I mean?
Okay, that's perfect.
Now, if they're self-employed, Linda, that's also a different set of questions, because similar, but a little bit different. So someone has a landscaping business and they're Schedule C. Well, I am going to ask the question, how, if at all, do you pay yourself? And we know that most Schedule C don't, as far as being on a payroll or anything. So then I'm advising the borrower, just link to your tax transcripts when you get to the tax, the income verification stage. Now, what's important about that is, did they file taxes for the most recent required year? We're only going to use the most recently required tax year for transcripts. To be clear, we're never going to ask a borrower to upload tax returns. It's all digital in that sense. So remember, it's going to be linking to irs.gov as an example to put in their username and password and link to their transcripts. However, if it's someone self-employed and they filed an extension, really we're pretty much dead in the water at that point, because there is no going back to the previous tax year, whatever the case might be. Now, what if I ask that question of self-employment, and how, if at all, do they pay themselves? And they say, well, I have a corporation and I've got myself and my spouse on a W-2 and we receive $5,000 every 2 weeks on the payroll. Great. Does that income go to a personal bank account? Yes. Perfect. Now my expectation of the homeowner is linked to your personal bank accounts. Do you see that, Linda? Where I'm just kind of,
That's perfect.
it's just
Yes.
the power of those questions helping navigate or set the expectation for the homeowner.
Yes, that's a great idea. So when they pull the tax transcripts, what are they looking at? Just that the taxes were filed, or are they looking at the adjusted gross?
They're looking at the adjusted gross.
Okay, gotcha.
Yeah. And by the way, again, full transparency, we do a lot of self-employed loans, but I wouldn't say it's our strength. I wouldn't say we have a system built but I mean, you and I both know, Linda, how intricate self-employed loans can be, right?
Yeah.
And I've always laughed about it over the years. I'll never forget. And this was probably 20 years ago. I had a borrower that had a small trucking company. And when I asked him the question, okay, well, how much, is your income? And he said, $500,000 a year. I'm like, wow, okay, cool. Well, what do you think his tax return said?
Negative 10,000 a year.
Right? That's about the exact number, by the way, Linda. You nailed it.
Yeah.
And it's so interesting because borrowers, as we know, can get frustrated. And I literally would have to drill it down and say, let me see if I can clarify this. How much did you pay taxes on? Oh,
Right.
10,000 a year. Well, that's the income we have to use,
Right.
Yep.
The other question I get a lot is, can we do mobile homes? And what are the property types that we can do this on?
We do not do manufactured and don't do mobile homes. Now, on the manufactured, it's kind of an interesting twist. The guidelines will say we do not do manufactured. However, I would say that if you run an inquiry in the AVM, and depending on how the county records are, you know what I mean? If it's
Yep.
listed as a single family, you may very well see that you get offers. But
Gotcha.
per the guidelines, not mobile, not manufactured. We are now doing 2 to 4 units, and duplexes. Trying to think of what other property types we do not do. I know there are some, Alex.
You do condos, right?
Oh yeah, we do condos. In fact, the strength there is, just a little side note, is no HOA cert or condo questionnaire.
That's
Wow.
a big plus on
And
it.
like you said, for the manufactured homes, if the county shows it as real property, it may show up on the AVM as real property. So
It
that's
very
good to
well
know,
could
too.
show up as an SFR, and yeah,
Yep.
so, and I have seen that. So
Good. Okay.
Yes. So just to really answer the question there, right? We do SFRs, townhomes, condominiums, and again, we don't ask for questionnaires or anything. Mid-rise, high-rise is fine. We do PUDs. We also do, again, to Tim's point, right, duplexes in 2 to 4 units. So as long as that's what's coming back, we're good to go. So really recommend running an inquiry. If offers are available, cool. We're not going to ask more than that. So, really just run an inquiry every time is my recommendation. But per the guidelines, no manufactured homes. And there's quite a few others, right? Houseboats, log homes, things of that nature that I'm sure you will ask on. A big one to me, I believe, correct me if I'm wrong, Reef, but I believe it's like 20 plus acres we won't lend on. So there's also some acreage when it comes to rural areas as well. So really, right, run the inquiry is my suggestion. For those like Linda in a partnership type with a direct referral link, it'll work the same for the borrower if they try to apply, but it's always soft credit. It never hurts.
Perfect. And then again, what's your minimum and your max loan amounts?
25,000 and min and 400,000 max.
Okay.
By the way, we are getting ready to, and it's going to roll out on a partner by partner basis. So Linda will stay close with you on this, and everybody, but we are getting ready to expand the loan amount max to 750,000.
Wow. Okay.
Yeah, that's big. Actually,
Yeah.
I've been a little bit surprised about the demand on that. We've had some of our partners reaching out asking, especially out on the Pacific here. You get into SoCal, San Francisco area, some of the values and loan amounts are extremely high.
Well, credit card debt is at an all-time high, as we know.
Yep.
People do not want to touch their first, so they want to utilize their equity and their seconds. So
No question about it. And when you start, and I know that CrossCountry is a mortgage coach shop. Are you a mortgage coach person, Linda?
I am not.
You're not. So
No.
I am. Now I have been since the dawn of time. Dave Savage and I are close, and I'm a big fan of that. But what I love about it on the topic you just brought up is when somebody has a 3% mortgage rate and they add an 8.5% HELOC, if you will, the blended rate is considerably lower than what a cash out transaction would be. I mean, it's not even close. So I love encouraging us. Yeah.
Yes. The fees are so different. We do the Barry Habib worksheet to show them the blended rate.
Love it.
Yep.
Love it. Yeah. And that does the same thing. In fact, well, this is live, so I shouldn't say that, but I love the visuals of MBS Highway. It's really clean.
When we talk about blended rate, everybody's like, what's that? And we're like, well, let us show you.
Yeah,
So,
well, it is really, really interesting. I'll tell you where there's also some good opportunity or use cases, especially with investment property borrowers. If you happen to have a borrower that owns a property free and clear, but they have a cash need, also, I would encourage comparing, use an inquiry to see where it prices out compared to doing a cash out on an investment. Now, granted, I know they may own it free and clear, so the LTV could be relatively low, but you still have the LLPAs that we all love so much. And on non-owner and the FICO requirements, it can get brutal pretty quick from an agency
right. We
perspective.
can still go up to 80 on the Equity Express if they own it free and clear, right?
Yes.
Okay. That's what I thought. I mean, the fees alone, it makes it make more sense typically to just do the Express.
Yeah. Well, especially when you've got those borrowers with such low existing first lien rates.
Right.
I think I just saw a stat over the last couple of weeks that I think 70% of homeowners have a 4% or lower.
Yes.
Yeah.
That is,
I'm getting a lot of calls from investors right now on refinancing or doing cash outs on, doing the DSCR program. And
yeah.
it works out better to just do the Equity Express on it. So much more easier and less documentation,
Sure.
Mhm.
especially if, they only want the 75, 100,000. It just makes more sense.
Yeah. And again, the retention ability there, you know what I mean? For future,
Yes,
right? Future
Mhm.
transactions, future help, whatever the case might be, that is really significant. Man,
absolutely.
gosh, Linda, I'm glad you're on this call. I love where your head's at on this, and that strategy of listed properties. Holy smokes, that's a good one.
Yeah, it's a good way. Loan officers are a little down and out right now. Either you're busy or you're not busy. It seems like there's no one in the middle. So my newer loan officers that are a little discouraged, I'm like, listen, just start calling everybody and just sell this Equity Express program. If you don't feel like you know what you know how to sell and do regular loans right now, just start selling this because you don't have to be the expert. The system is going to be the expert for you. So you could actually have residual income coming in, selling 2 or 3 of these a day. I mean, it makes perfect sense.
Yeah,
That's
and
intense.
and to your point, Linda, I mean, if that newer LO or that's LO that's looking for more pipeline business, if you will, and then all of a sudden they're doing that and helping out a potential referral partner, and now that referral partner may very well lead to now a full purchase transaction, pre-approval or whatever the case, you know what I mean? So
Yes.
it's a domino effect, right? So
Yes.
I think there's a great opportunity there. That is really, really,
Yeah, that's something I like to teach a lot of new LOs about too. This is a good starting place as well. It's good for a lot of business. It's good for new LOs as well who want to get their foot in the door with a lot of positions, just like Tim was
And
saying.
for all the teams that are like, I just don't have time, they don't have time not to do this. This is just
Mhm.
so easy.
yeah, well, it's a great, how do I want to say this? Look, I don't care what social media platform you're on, turn on your TV, look at the newspaper, whatever the case is, the topic of HELOCs or get a home equity line of credit or do this or do that, it is everywhere right now. And so
Mhm.
the question comes down to, do you want to help that homeowner with that? Or you see what I mean? The opportunity is real. Yeah, I mean, last month, maybe it was the month before. I mean, just to put some numbers behind this, um, we did like as a company, we did like 550 million in a month in here.
Wow. Yeah. And
So
if you're going out to sales meetings, I would tell everybody, listen, if you're afraid that values are about to start decreasing, you want to go ahead and get your home equity line in place now before they do, if you think they are going to. So that's a great
Mhm.
selling point too, is let's go ahead and get you the equity out that you need. You don't have to utilize it. You can have it sitting there for emergencies, but let's go ahead and do it when we know that values are where they need to be to access the equity that you need.
Mhm.
by the way, it's a great point, and I've said numerous times in my career that equity is cool. It's awesome, right? I have $500,000 equity, but it's not liquid. It's not touchy-feely spendable money. It's great to brag about at a barbecue or a block party. But to your point, Linda, if the market goes down in value, now I go from 500,000 to 400,000 to 300,000, and I'm using drastic example here, but it is a great point that you make that right now with equity being as high as it is, doesn't it make sense to at least tap into it and make it liquid, right? The opportunity is
Right.
real.
And it becomes tax deductible. So you can use that as a tax write-off.
Yeah, I love that. Well, do you guys want to, Reef, do you want to open it up to some Q&A?
Yeah, sure. First thing, we do have somebody that raised their hand. Andrew, maybe we can start there and then we can go into
Yeah,
normal questions. So Andrew, if you're there, giving you the permission to
there he is. He just needs to unmute it. There you go.
Hey guys.
We know Andrew.
Yeah. Yes,
It's
you
Andrew.
do. You're working on something for me.
Reef, it's Andrew again. Here we go. No, I'm just kidding.
There we go. Your rental properties, Reef and I talked about this a little bit, but how many of those most investors I know slam their properties into an LLC, and then that's going to be problematic on your end. And so I'm hopefully I'm shockingly wrong, but I feel like most investors have those properties in entities.
Actually, Andrew, I don't know that you're wrong. I don't know that it's a blanket statement. And Linda, you can comment on this as well. I think when you have a homeowner that has 1 or 2 investment properties, maybe they're not in LLCs. You have an investor that has 10. Yeah, probably in an LLC type of situation, which right now today takes you down the DSCR path. I don't know of any other path outside of DSCR. Would you agree with that, Linda?
Correct. If it's in an LLC, unless they go ahead and get it out of the LLC in order to do this. But do you require seasoning if they do that?
90 days.
90
So
days.
any
Okay.
title change. Now, I will say, and Andrew, it is coming, but we are building a DSCR product as well,
Right.
which is going to allow LLCs. And I will share with you all that the thought process here is, as we test and build this, if we can get this to work in LLCs from a DSCR product, well, then can that open the door for us to use LLCs on our traditional HELOC product?
Right.
And if
That
that's
would
the
be
case, that would be a win, right?
Yes.
That'd be a serious win.
I think just having this, just, it's like anything, once you start to focus on it, opportunities pop up everywhere. Yesterday I got off with a call. I'm going to be doing a new builder fallout for a woman. She's getting a divorce. They're having a terrible fight because he doesn't want to unlock funds to pay her from his interest-bearing real estate accounts, which are going to require early withdrawal penalties. And like, bam, like, this home's loaded, their home they're in now together is loaded with equity. I have to presume that this would probably solve for it and help him unlock that and hopefully make them not bark at each other. I just talked to my tree gal. They're larger jobs. Often they're bigger jobs. People don't have the money on a credit card or sitting and checking and savings. Like there's probably so many people that go to sell jobs at a house that are of a dollar amount, which this would fit nicely in for the more black and white homeowners from their income profiles. And so there's just 2 right there, immediate leads. It's like, man, these things are probably all over the place, right?
No, the opportunity is real, hands down.
Yep. And then lastly, I'll take this offline, Mr. Rowan. If you could let me know what we're status on my strange existing, non-existing HELOC, that'd be so helpful. Okay.
I do have some feedback for you on that, so I'll reach out to you.
Thank you, guys.
Yep. Thanks, Andrew.
All right. Let's have Mohammed jump in. He's got his hand up as well. Feel free to unmute.
Yes, can you hear me?
Yeah, we got you.
Yeah.
Okay, I'm in Texas, and HELOC is kind of, hard in Texas, but I know Exxon can do it. I have a client that I referred that link. He has owner-occupied property and 4 investment property. One of the property is fully paid off, and he wants some HELOC on that. But when he applied, it was declined. I checked his credit report. He has a installment pay, which is he said he took that money to take a course and they didn't fulfill the course, so the last payment he didn't make. That is showing on his credit report. That's probably hurting him, and that's probably one of the reasons he's not qualified. But he said he will. I think he already settled it. He paid it off or something like that. Does he still have to wait another year before he can apply, or can we do anything?
Well, it wouldn't be a year. What we're going to be held to, we don't have the ability to make any changes with credit reports or agencies or anything of that nature. So we're going to be held to whatever data we pull, which is through Experian, and it's the FICO 9 model. So if that borrower has confirmation that that's been resolved, then you could just simply do a new inquiry. And Mohammed, on that, I would encourage you to actually get in and drive the inquiry in that situation, make sure the data is being entered accurately, and that type of thing, versus just letting the borrower drive it from A to Z. Does that make sense?
Okay, yeah.
Because-
It was kind of like what you're talking about earlier, like somebody put a monthly income versus yearly income.
Well, yeah, or maybe you end up seeing that there's a lien mismatch or something. That,
Okay.
by the way, to be clear, we do now have, and it doesn't come up every time, but we do now have a lien attestation screen. And sometimes when someone has multiple properties, the wrong lien is pulling up for the subject property.
Okay.
Well, we now have an attestation screen that you can correct that. It's important to know, though, the borrower does not.
Okay.
Not in the direct link model. They do not see the attestation screen.
And how
Actually,
do I
Linda,
check
that's a
all
good
those?
side note for you as well. What's that,
Yeah,
Mohammed?
so just write that down.
Yeah, how do I check? Like, all I know that just to give him the link and everything else is taken care of from there. So where do I check, and how do? Is there any person I can talk to check
Yes,
my?
that's this team right here.
Okay.
Between myself, Alex, and Reef, and we also have Scott as well. And Alex just put some stuff in the thread, but we'll get some information out to you on how to contact or schedule time with the sales success team, but we can help
Okay.
you walk through your first inquiry.
Okay.
Yes,
Alright,
I'll be
sounds
sending
good.
out an email after this, like I do with all webinars, and on there that'll be our contact information, and you can schedule time with our team. So we're here for sales advice strategy, and absolutely we can go ahead and get you set up on that inquiry. I did put a link to our lead portal system where inquiries can happen. So just keep in mind, look forward to that email, and I'll get a copy of this recording out on YouTube as well for you folks.
Okay, and I have a couple more quick questions. Is there any minimum credit score requirements for before I send someone this link?
640 on primary residence and 680 on investment or second homes.
Okay, 680. I think his credit score also probably a little low. I'm not sure. And if there's any like a dispute or anything, is that has to be removed, or dispute could be overlooked?
Again,
On the credit-
if it comes up and we see any delinquencies or collections or anything like that, you'll see that as the reason for no offers. And outside of the borrower handling, getting it fixed with the bureaus, there's not much we can do there.
Okay. Okay. All right. That's all I need to know. Thank you.
Awesome. We have Kenneth who would like to ask a question as well. Go ahead, Kenneth. If you can hear us.
Yes, I know that you mentioned no manufactured homes or mobile homes, but what about modular homes that are built on a foundation? Are those acceptable?
Again, it's going to come down to how the property comes up with in the county records and the AVM. That's really what it's going to come down to. If you run an inquiry and the property's the property type is accepted, the classification of it is accepted, you'll know right away. Literally, when you do that inquiry, you'll know in less than 2 minutes.
Okay, and that was my question. Thank you.
Thank you, Ken.
If they deny it for the property type, the denial will tell you that it was due to property type, correct?
That's correct.
That's correct.
Yeah.
And you can see that in the details. So you can click that options menu, go in the details of the file. It'll show you property information. So, per guidelines, no modular homes, but back to Tim's point, right? If it has a foundation, if we're pulling SFR, we'll be good to go in that case. So I always recommend an inquiry.
Okay.
Definitely. Just run it and see.
Exactly, Linda.
And also for general HELOC things like, minimum amounts, FICO requirements, things like that, shoot us an email. We'll get the resource drive over to you guys that has a product guide that goes over those things. So you don't have to try to memorize it as well. So keep that in mind.
Tim,
go
real quick question. The loan is interest only for the first 5 years, correct?
It is not actually, it's fully amortizing.
Okay.
You all do have, Linda, you guys do have internally, you have like 3 different options. One of them is ours, and then the other one is there. You have another one that I do think has an interest only aspect.
Okay. Gotcha.
We are kicking the tires on that. We'll see where that goes. But
Okay.
Yeah, Francisco, if you can hear me, go ahead and unmute and you can ask your question. Maybe while we're waiting for Francisco, Tiffany, if you can hear me, go ahead and unmute yourself as
Okay,
well.
can you hear me now?
Here you are. You're jumping in. Yeah, go ahead.
Okay, okay. Sorry, I was talking all by myself.
Mhm.
I wonder how can I get the link? I have a couple of borrowers. They're going to need a HELOC, and I'm new in this, and I saw your class, so I want to make sure that I can do this right. I'm looking at the portal right now, but how can I get the link so I can send it to my borrowers?
It depends on what model you're in, and this is where it can be a little confusing. So I'll do my best to clarify. So, one, Francisco, you can reach out to our team. We can look up. We can see. We don't have to do it live on this call, but we can look up and see where you're at as a partner, what model you're in. But there are two different models. There's the retail model, like what Linda is a part of with our CrossCountry group, and they have a link as well as the inquiry tool. In Figure Wholesale, the link is not an option, that direct link. You have to do an inquiry. And that's a RESPA thing, by the way.
Okay, I'm with I should say this with Loan Factory, and I'm in Texas also.
Okay. So right now that's Figure Wholesale. However, I will tell you that that's going to change in short order for you. So probably in the next couple months, you'll see you will have the link ability, just not yet.
Oh, so there is no link for me at all.
Not yet, not today, just the inquiry tool, which by the way
So-
is very powerful. Don't take away from that. It's
So,
very powerful.
so I'm looking at the portal right now, and it says the inquiry is sent. So that's how can I send you the inquiry?
Does it say inquiry sent or does it say borrower notified?
It says inquiry sent, inquiry coverage. I guess this is it. Oh, sorry, that's part of your portal, but it's not. It's not that part. How can
Yeah.
I send you the information to see if I can?
You just reach out to our sales success team, grab some time on our calendar, just email us there, and what
Okay.
we'll do is dive into it one-on-one with you, Francisco.
Perfect. Okay, thank you.
Tiffany, if you can hear us, go ahead and unmute.
Hi, thank you so much. So part of the previous question was what I was wondering too. So it sounds like I don't have the right profile to get a link, but maybe that'll change. I'm in California.
Okay.
I'm excited to hear that the loan amounts could possibly go up to 750K.
Yep.
It would be huge for my area and for the properties for a lot of my borrowers. But my question is about the link itself. I have clients who didn't respond fast enough after I submitted an inquiry, and then it says the link has expired.
It will expire after 14 days.
Okay, 14 days. And then when I've tried resubmitting them, there is no offer. Why is that?
So what will happen there? Let me kind of elaborate on that. So the 14 days is for how long the soft credit pull is good for. What'll happen is after income verification, identity verification, once we get to that final offer stage where we pull hard credit, it will extend that expiration date out 29 days. So realistically, what'll happen there is you really should engage with the borrower, push them through. What could potentially happen though in your situation, right, is if the borrower for those 14 days, they don't get to the hard credit step, it'll simply expire. And I get a lot of questions on that where they're like, hey, why was this declined? What's going on? You'll see in there, it'll just say credit incomplete. You are welcome to redo an inquiry, but that's going to be a new soft credit pull. It's going to be a new AVM. It's going to be pulling in brand new information. So potentially they can get different offers or no offers. So that's something where you'll see in the details what the differences are. You can see the reasons if there are no offers to kind of take a look. And it just depends on that particular situation. So it would be just something I'd have to look at to give you an exact answer on a particular file. But realistically, again, just keep in mind, the borrower has time to think it over. But if it's coming up on those 14 days, try to push them through if this is something where they do want to proceed.
Okay, so I'll just have to be mindful and let them know up front that we have a limited time for them to respond.
Exactly.
Okay, so when I look at my client who received no offers the second time, the reason DTI eligibility. So I guess at some point, maybe they incurred more debt and now they're not eligible.
Possible.
And you can
You know-
see the revolving monthly payment reported by Experian in the details, so you can compare that to the previous file, so you can see if there is a difference. We do have that direct debt payoff feature as well, so potentially, if there were debts to pay off, it would let you know. But that's probably where I would start to see if there's a difference in the reporting revolving monthly payments.
And
You can always run another inquiry maybe in a couple of weeks to see. But I would say just if they get offers, if they want to proceed, to make sure they get through at least within 14 days.
So
okay, and where would I go to see the details on why their second application did not progress?
off to the right-hand side of the pipeline view, you'll see a box with 3 dots on it. If you click on that, then click details.
And I can actually,
That's
And
interesting.
And actually, Tiffany, schedule some time with us, please.
Yeah, I'll do that. I'll
And
take
let's
this
dive
offline.
into some
Mhm.
on a per file basis, even if we need to, just to kind of
Yeah.
help navigate that.
Okay, great. I'll take it offline. And then one last question. Are there any marketing flyers that that I have access to help?
We do have some marketing resources. Alex and team can get those over to you. Now you'd have to brand them,
Oh, yeah.
but it gives the outlines and guidelines and
Perfect.
and I'll
good
send those
marketing
with the
pieces.
email.
Great. Yeah, something really simple. Thank you so much. I'm gonna
Mhm.
mute myself now.
Thanks, Tiffany.
All right, Robert, if you want to jump in, I know you have some questions you typed out. If you want to ask them, we can answer them for you.
Yes, great, thanks. Yeah, just a follow up on the one that responded to on the Zeal that doesn't get qualified for their income, the verified income. You're saying it's peer to peer, but isn't Zeal mostly coming from their bank account, from their renter?
No, it's actually a great point, but what's happening is it's a great question also, Robert. But when rental incomes are being used, and we can use that, but what the system's going to look for is the source and the cadence and the amount and the consistency. What happens with Zelle is it's not often the same date, the same amount, and the same, you know what I mean, every single month. If it was coming from a property management company, Select Group Property Management, and there's a deposit made on the 5th of every month, the system would pick up that deposit. But on Zelle, Venmo, PayPal, it won't pick up those deposits.
Even though they're, let's just say they are on the same day on rent payments due, let's say on the 1st, and it's the same amount, it doesn't matter. It just,
when our system, well, when the Plaid system, if you will, sees a Zelle deposit, there's no way of actually knowing the source of that other than someone used Zelle.
okay, all right. And then another question was on the tax year. Obviously, it's 2024 for the tax, right?
Correct.
And then for someone that's self-employed, I have a realtor right now that I was on the phone right before your call. She wants to do her home, but I know her taxes aren't done. And now her deposits on her commissions, she just uses her bank account, and you'll see that as the income.
Yes.
Okay. And I keep hearing the term Equity Express. Am I missing something there? I haven't heard that term.
It's a CCM branded, and because we have Linda on the call, who's regional with CCM, and that's how CCM has branded it. CrossCountry Mortgage has branded it internally.
So basically, the HELOC that we're talking about is the Equity Express. Okay, got it.
You nailed it.
All right. Well, I think that is everybody for the verbal questions. If we want to talk a little bit about some typed out questions, we have an anonymous that's asking, I thought we couldn't do loans if it's listed on the MLS lately. It's been saying there are no offers for listed properties.
So you can do up to 70%, right?
I think 80 on listed properties.
Mm-hmm.
Oh, so that just recently changed.
There's 2 things on that, and I want to make this clear. Just because there's different individuals here from different partnership types. Number 1, check internally. A couple of our partners actually don't allow listed properties. So ensure that your particular organization does, I should say. And number 2, there are actually certain states that will not allow listed properties. Reason being, for listed properties, we will set the origination fee to 2.99%. But certain states have rate caps. So sometimes the origination fee is 1%, 2% capped. So if we cannot set the origination fee, the listed property will be unavailable. So I will again send out documentation and a resource drive link I'll send it out via email. You can read through and I'll have information on those listed properties. So if you're not seeing offers, it could potentially be one of those two would be the way I'm thinking. For a majority of our partners in Figure Wholesale, listed properties are absolutely eligible, and you can make that selection.
Dave is asking, or was there any update on sending a text versus using email for authentication? So two-factor.
That is being worked on, by the way. There's some real pieces to navigate when it comes to text. I mean, talk about a compliance nightmare, dare I say it any other way, but we are working on that, trying to find out a path to that.
Yeah, there's a question from Victor asking if we can do this HELOC on non-owner occupied properties. We can do those. It's not a problem. Julie's asking what Linda was saying about reaching out to listed agents about their sellers doing the Equity Express, so your product can be used on properties listed. Yes, of course they can.
By the way,
We use it a ton for that, and also instead of doing bridge loans. So if somebody's got their property to be listed, we're going ahead and accessing the equity for them if needed.
And by the way, Linda, I'm sure you would agree, but because I think you mentioned this earlier, but considerably less expensive than a bridge loan.
Absolutely. Less expensive, faster. I mean, it's just the way to go if in most situations in place of a bridge loan. So the loan officers that their companies don't offer bridge loans, they can kind of say they have something, you know, in place. And someone had just asked about us branding it as the Equity Express. If the companies they work for will allow them, I would certainly come up with their own brand for this.
Yeah, and we do have several partners that have done that as well.
Yes.
Yeah, for sure. I love it. Bob Wexler asks if we're back in New York. I'm not, Bob. I'm back out on the West Coast, but love seeing you a few weeks ago. In fact, we need to get up to date and connect with your team again soon. And then currently no properties in investment properties in LLC currently. We are trying to work or find a path for that. Started an app on a primary residence, but customer changed mind and wants to do a HELOC on second home. How do I change that out? What you'd have to do is cancel the existing inquiry and simply start a new one.
Bob was asking if we were licensed in New York.
Oh,
not if we're out there.
I thought Bob just wanted to see us again.
So self-centered, I tell you.
The answer is yes, depending on the model. Like, again, there's a difference between retail and wholesale there. So, Bob, we can take it offline. You want to dive into that?
Dean's asking, we started a HELOC on a primary residence, but now we want to do a second home. How do I change that?
Yeah, it would just be a cancel a new inquiry.
Do I have to be licensed in the subject property state to offer this HELOC program?
Yes.
Correct.
Do you want to give the phone number that they can give out for cancellation? So that the borrower has that number to call to cancel the app? I've had to have a couple of my borrowers do that, and it literally took 5 minutes.
What I'm going to do, Linda, is I'm going to send out an email with that kind of information. That phone number you're referencing is different depending on the partner. So I can't send out like a blanket. Just keep in mind, everyone, we have that operations team on the back end. So if the borrower needs to cancel an application, they're going to have to either call or chat in. I recommend chat. It's the quickest way. They'll get a response instantly. So if they have an in-flight application that needs to be canceled, they can just chat in real quick. They'll give permission. It can be canceled. You can start a new inquiry. So just keep that in mind. But I'll send out information on all of that.
And by the way, Linda, a little side note, there's a different path as well. You could let your borrower know that if that's the situation and the borrower needs to drive canceling, they can do it with the chat feature as well. And the borrowers
I do that, but some of my older borrowers are like, I can't find the chat. I'm like, it's down at the bottom right, but you know how that goes.
Yeah, I do.
Yeah.
Last couple of questions here. Tina's asking, can you explain more about using spousal income? What if they are not currently on title? They do not have to be on title. Quite simply, it just needs to be a community property in homestead state. Again, I'll send out documentation. It'll have those states listed in there. It's most of them. But it just needs to be a combined total for the income. So that's something where they'll verify the income, using one of their accounts. but that's something where we're not going to pull credit for the spouse, which I find very powerful. So double check when you're doing inquiries if you can include spousal income. If they're both on title, you can do an inquiry for both, see who gets better offers. And if you're in a partnership type like CCM where you have a direct referral link, double check. Sometimes borrowers won't think to include the spouse's income, where you can see, oh, hey, maybe we could have, and that could have got him offers or better offers. So pipeline management, I think, is really, really big.
And then we'll wrap this up. Dean had asked one HELOC at a time, correct? And it's a 45-day waiting period in between HELOCs. If you do that,
Not sure on the Tiffany one.
yeah, I'm not sure. I think that's yeah. Who is responsible for the credit report fee, soft and hard pulls? It's all built into our system. There is no additional fee for that.
I was going to say one of the things I've been doing, if someone calls me before they make application, I tell them to go ahead and pull the personal bank statements that they're going to be using to upload and kind of see what the average deposits are that are going in. If it's a community state, regardless of who the deposits are coming from. So that can kind of help with the amount of income that the person puts in.
That's a great point.
Yeah.
Yeah, it is a great point. And Dean asked the questions, what if you have a borrower who is challenged with anything that relates to tech, email, phone, etc.? Is there any way to get a paper package out? The answer is no. There is no paper package. There's no, you have to take a traditional loan process, what we all know and understand, and set it outside of your mind, and do not try and fit that process into this. I will share with you that I had a loan officer make this comment to me on a call a couple weeks ago, and she said, can I have the borrower come in? They don't have a cell phone. They don't have a computer. They don't have internet. My response was, this is not the process and product for them. It's just not. Because
Right.
it's all digital, and you're better off cutting that off right then and there, right? Find a different strategy for the borrower would be my advice.
Now, I did have one where, and correct me if I'm wrong, but if they click on the chat option, so in other words, I had one who was having a hard time getting their bank statements uploaded. They clicked on the chat option, and the chat option allowed them to just email those bank statements and the ID directly.
That is correct.
And that's a big thing with the chat function is you can attach documents. So for
Correct.
conditions or anything additional, especially with spousal income, right? If they link up their checking account, they don't have joint checking, they haven't filed joint taxes, we can take spousal pay stubs along with the primary. That's a great way. They can just chat in. Here's, a quick copy of me and my spouse's pay stubs. It can take 1 to 2 business days to process manually that way. But that is a really good option there.
Yeah, I tell all my tech savvy or the less tech savvy ones, the chat option is your best friend. They're very quick to respond, and then they're going to give you a direct link for you to send those documents over. So some of the less tech savvy borrowers can use that option to navigate the system.
I just love it. And we are going to wrap things up because we're a couple minutes over. But Linda, I cannot thank you enough. This has been an incredible conversation, and your tips and tricks. And hey, I got to tell you, that listed properties thing, I'm telling you folks, to run with that. Like that is good stuff right there. And so also the power of setting expectations. And Linda, I just want to give kudos to you and your team, because clearly you're on board with that. In other words, letting the borrower know what to expect, how they're going to verify their income, how they're going to navigate, how to use the chat function when and where they need it. So nicely done. And Linda and I actually did get a chance to meet a year or so ago at their sales rally. And so she remembered that. I did not. She remembered. And so anyway, Linda, thank you so much for being on this call. Thank you for the feedback. And reach out to the sales success team, everybody. Alex and team will follow up with a recording of this webinar, as well as some resources, also some pathways for continued support for both LOs and your borrowers. And yeah, lean on us as much as you can. You want some one-on-one time, help with inquiries, help understanding your current model with us here. Great. Reach out, and we're more than happy to help you.
And if anybody wants to reach out to me as well, I'd be happy to answer any questions regardless of what company they're with. And I appreciate you so much for inviting me, and I love our partnership.
Yeah, Linda, thank you again so much.
Linda,
Listen, everybody, the opportunity is real. Have a great rest of your week.
Thank you, everyone. See you.